What's going on, guys? Welcome to the channel. In this video, I want to show you guys how you can maximize your profits by squeezing out bigger trades using a one-to-one risk to reward ratio model, whatever you want to call it. Now, in this video, I've got some specific levels kind of marked out. What I did was kind of go back 2 weeks in time, look at some previous highs, look at some previous lows, mark out some areas of resistance. So coming into Thursday's session, I had a level of supply sitting at 18,512. I had an area of support sitting at 18,300. So coming into the New York session, we were already making these lower highs. We were trading below the area of 18,512. What I was realistically looking for was to kind of take out this previous swing low. Okay. So when you think about us getting rejected at this area of supply, okay, the thesis, the bias is very, very simple, right? We're not trying to outsmart the markets. Are we below supply? We're bearish. Are we above supply? We're bullish. We keep it very, very simple. Now, what I'm using is a 15-minute time frame. What I'm also using as my stop loss is a 1 ATR. Okay, so let's look at the ATR down here at the bottom of the screen. You can see for the total day, for the entire day, it was 65 points. With that being said, we're going to use about a 60 to 65 point stop loss. Now, many of you guys who are trading the NASDAQ 100 know that the NASDAQ 100 has been extremely volatile. The ranges have been extremely large. So giving up 50, 60, even 70, 80 points is not really, out of the ordinary right now. But also what it's going to allow you to do by giving up that many points, it's going to allow you to target bigger price targets, right? So right now, what we're looking for is at least 60 points to the upside, meaning profit, right? If we're looking for 100 points, that's about a 2R trade. So again, you can definitely target based on your measured potential being down here at 300. You can definitely target a 2R trade, but I like to keep things simple, keep the win rate a little bit higher. So if I'm going to give up 60 to 65 points, I'm looking for 60 to 65 points on the profit side. Okay. Before I get into the actual setup and I show you how we're going to create our stop loss and where our take profit's going to be, guys, I ran a poll. I did something super, super special. I want Evolution Traders to be accessible to everyone. If you want to get access, or you've been on the fence about joining and you want access to the courses, you want access to the live community, you want access to my video lessons that are not on YouTube, and you want access to that trading, that live trading multiple days a week, right now for less than $1 a day, guys, less than an 80% off 50K evaluation, you can be a member of Evolution Traders. That link is down in the description box below. Now, what we're looking at here and what gave me the bias to kind of lean short is coming into the open, I was looking at the high put in here at London, looking at the pullback into our 512 support, looking at the breach, looking at the reclaim, and then telling myself this market, this price action just put in a lower high. Okay. Now that we've put in a lower high, we've already lost and we've kind of dampened, right? We've kind of loosened up, softened up that 512 support that's sitting right here. I know one thing. If price action is going to confirm this low, we potentially have a short opportunity into our next demand. Very simple. I'm not going to try to outsmart the market here. I'm going to get in short. Once the market opens up and we have a little bit of a quick back test here, I am getting in short as soon as we start to reject and start to push down. Now, if this market wants to break over 512, great. I've got a 60-point stop loss up here that's going to help prevent this completely running against me. That's fine. I want to get in as soon as we start to back test this supply and we start to push down, we push down towards this swing low. I want to be short in this candle right off the open. Again, set that 60-point stop loss, set your 60-point take profit. Now let's just kind of look and see where exactly you would have been taking profit on this trade, depending on when you got into the trade. If you got into this trade, and we can actually pull up a 5-minute time frame to kind of zoom in just a little bit more. Okay. So if you kind of look at the opening range here, okay, on this 5-minute candle, right off the gates, we spike. Okay. And let's actually toggle down into a 2-minute. okay, because I want to get very, very precise here. Right off the gates, you see that the initial print, okay, the initial print is going to open here. It immediately back tests 512. As soon as it gets rejected at 512, okay, and it starts to push down and it starts to take out this floor that was built here, we want to be short. 100% we want to be short. So as soon as you jump this short somewhere in this range, that price point is sitting at around 18,480, okay? Within the first 5-minute candle, this trades all the way to a low of 18,434, okay? So from 80 to 34, you're looking at almost 50 points worth of potential in the first 2-minute bar, guys. The next candle opens up, it starts to backtest a little bit. Notice how it stays underneath the range, starts to push down. Second candle, which is 4 minutes into the market open, trades down to 18,413. Guys, you got your 1-to-1 risking 60 points to make 60 points. Now, again, you may be thinking, well, how much size can I put on if I'm risking 60 points? The simple math that I do is if I'm trading 1 micro and I'm risking 60 points, it's a $120 loss. What is my pain tolerance? How much am I willing to lose on one particular trade? Is it $120? Then we're going to trade 1 micro. Is it $250 a trade? We're going to trade 2. Is it closer to $350, $360? Again, I would say personally, if you're trading a 50K account, we want to keep our, individual trade loss. I would personally, again, this is me personally, under $350. So on this particular trade, I would say we're risking no more than $350. We're going to manage that by trading 3 micros, but we're also looking for $300, $350, even more, $400, if we can squeeze that and we've got some solid momentum where we can just hold. Maybe we can squeeze 70 points. Maybe we can squeeze 80 points, right? As long as it's moving in your favor, you want to squeeze as much as you can out of it, okay? So targeting a 1-to-1, trading 3 micro contracts at 60 points a take profit, you are looking at over $350 profit inside the first 10 to 15 minutes of the market open. When you're trading prop firms, you lock that up, you bank away that day, you move on, especially if you're copy trading 10 accounts together, especially if you're copy trading 20 accounts together. Guys, we're talking about making $350 across 10 accounts is over $3,500. That's a phenomenal day. If you can bank those days away for a couple of weeks, you're well on your way to a $10,000 payout a month trading this way. This way of trading also reduces the amount of stress that you're putting on yourself because you're not hyper scalping where you're getting in, you're getting out, you're going short, you're going back long, you're going long again, you're going short. We're looking for one trade idea and we're going to ride that trade idea until we're stopped out or we take profit. This is what I'm doing inside of Evolution Traders. I'm showing the screen, I'm talking through the analysis. Again, if you guys want to get in that room right now for less than $1 a day, you can become a member of Evolution Traders. Again, once you break down a key area of support, once you start to reject that previous area of support, look at the area of support that we lost, okay? In the pre-market, we lost the area, the 512 area of support. We tried to reclaim it. There was no backtest hold consolidation to push higher. There was none of that. Okay, so because we got none of that price action, you knew that putting a stop loss above this swing high outside your zone, and keep in mind, guys, my zones are always 60 points because typically I'm looking to risk no more than 60 to 75 points a trade. So my zones will always kind of reflect that. As soon as we back tested right off the gates, there is no second guessing ourselves. We are not asking ourselves. We are not debating with ourselves. We are not, not trusting of ourselves. Guys, if this market was going to push higher, it would have reclaimed that area of supply. It did not do that. We have to be firing short here off the open. We've got to be firing short. You've got to automatically set that stop loss at 60 points. Use the ATR. So I trade a 15-minute time frame. Use your ATR to kind of decipher how much of a stop loss you're going to be giving yourself based on the 15-minute chart. Again, if you choose to use the 30-minute chart, your stop loss is going to be a little bit higher, but it's going to give you more wiggle room. I really wouldn't recommend doing it on a 1 or 2 minute time frame, because if the market does get choppy and gets consolidating, you're definitely going to kind of chop yourself up to bits and pieces. We're playing bigger key levels here. We are playing for bigger moves. We are playing for 50 points. We are playing for 100 points. We are playing for 200-point moves. We are not playing for 5, 6, 7, 8 points. We are playing for big moves. Again, if you're interested in learning more on this style of trading, definitely join. You can find that link down in the description box below. I will see all of you guys in the next video. Make sure to give me a thumbs up on this one. I'll catch you guys all next time.